Hello, and welcome to another update video on gold. Yeah, gold continues to grind just sideways at the moment, pretty much without clear direction. If we zoom out a little bit, then you can see that the market has been moving sideways for quite a bit. I mentioned a few times, someone asked me in the last update, I mean, couldn't it be a triangle? I did say before, yeah, of course. I mean, we could be forming some kind of a triangle pattern here. That is, of course, a possibility, but for a triangle, I don't know, it does lack the proportions really for now. I mean, we would need to see a little bit more data for really a triangle. For now, I can track a bullish count here, which would be a 1-2 setup, and then another 1-2, 1-2 setup, and we could grind higher like that. I haven't fully labeled it, but it would be a pathway to higher prices more directly. Or if we follow the short-term bearish count, basically A, B, C, and we're now working on the C wave, 1, 2, 3, 4, 5, then it would be short-term bearish, but should eventually still lead to higher prices because I have not called a major top yet. Simply pointing out here the possibility of a deeper pullback lower. But again, we are in a correction. I mean, I've been highlighting since. I mean, my view is at the moment that we are possibly caught in a correction. We could get out of this correction via this green wave count. I'm not quite convinced about it. So I did say it in one of the member updates earlier today. I don't have a clear preference here because I would like to see it first break out of this range here to the upside, take out this $3,480 level, this swing high there from the 13th of June. We're quite far away from that, but I'm going to zoom in. Bigger picture, nothing has changed, so we could still, especially as long as we stay below this Fibonacci resistance area, we could still easily be working on a corrective pullback in this wave 4, which could take the price into this region between $3,092 and $2,877. I mean, that hasn't changed. From a short-term bearish point of view, this is absolutely still valid and will become more likely with a break below our support levels here. So I'm going to talk about these now. At the moment, the price is kind of holding support. So the green count, which is at least let's say a pathway to higher prices, remains possible as long as we hold support. Yeah. So let us zoom in a little bit. And you can see here on this chart, I mean, I don't particularly like this wave count. We have a wave 1 to the upside, a wave 2 to the downside. This looks more like 3 waves up, but due to the depth of the pullback, I'm labeling this now as a 1-2 setup as well. Again, I don't have a clear preference. This is not really a high confidence count because we do have too many 1-2 setups. This is a 1-2, 1-2, 1-2 setup, which means that this would be quite aggressively bullish to the upside if it plays out. I mean, it's possible, but it just doesn't really fit into the bigger picture so much. But if we see a break above the last swing high here, first of all, 3,375, and then $3,390. If we get a break above these levels, then green will become more probable. At the moment, we're holding Fibonacci support, especially here. This is the Fibonacci support area, which is relevant for a wave 2 pullback. The only reason why I still consider this potentially part of the green scenario is because the pullback is corrective in nature. The move up here, I have to say, it's not clearly impulsive. It looks more like a 3-wave move, but sometimes on these smaller time frames, especially on the gold futures chart, we do see some distortions. I mean, we're here on a pretty small time frame, so we're navigating it with agility, yeah. But I mean, it's a 3-wave pullback. As long as we're holding Fibonacci support and we are looking at a 3-wave pullback, I think there is a chance for higher prices. You have the levels. I mean, again, I'm not probability-wise, it's pretty neutral because we are in a broader range, right? And the price has so far not really broken out to the upside. We haven't really broken down yet. We're just in a range, and there's quite a lot of choppy price action typically. In my view, we have not clearly started the next uptrend yet. But if it starts, then it should start from here, right? So it might be worth watching. The invalidation point for the green scenario is not the $3,311 level. That is simply, let's say, the 78.6 retrace level. And it is just a key support level. So what is more relevant is the level down there indicated by the red line. That's the formal invalidation point for a 1-2 setup, and it's located at $3,290. So you have support where probabilities start to shift, and then you have the clear invalidation point. So I hope that helps to navigate the structures here in the short term. I hope you liked the update. If you did, please hit the like button, leave a comment, and subscribe. And if you really like the content, then please check out the channel membership. Also, if you're interested in additional updates for the S&P 500, the Nasdaq, gold and silver, and sometimes platinum, then check out our stocks membership. You can find the link in the description. Thanks so much. Bye-bye.